Day 14, swing trading breakouts versus pullbacks. All right, so we can actually break this down because I didn't touch into this too much before. A breakout occurs when price moves above a key resistance level. So if we look back at this Tesla chart, we can see technically a breakout would be this is a key resistance level. So when we close above here, even though it gapped up crazily, this would be like another breakout. So we say this breakout. This is a key resistance level. We broke out, so this would be a breakout, right? Just breaking out above resistance levels. This is a resistance level, a breakout. Resistance level, breakout. Resistance level, breakout. Simple. That's all it is. So a breakout is just breaking the resistance level and holding above it and not rejecting it. See how this rejected this resistance level? It came down, rejected it, and bounced up. That's a rejection. When it closes above, it's a breakout. Okay, so that's a breakout. So you got resistance breakout, you got support breakout, which I just showed you both of those. So that's that. A pullback is basically a pullback into that. So this is actually a pullback into a resistance level, and it's a hammer candle, which we touched on earlier in this course. So we are coming up, we hit this resistance level here, then we bounce back to this resistance level. We get a hammer candle, a green bullish, and we're in the uptrend, as you can see right here. Obviously, the one it's a one red candle here, but whatever. You know that's why I don't use it because, like, imagine the one trade that it stops you out and then you hit one private target, two private targets. It's insane, but this is a pullback. So you take this pullback, pull back until picture perfect resistance level. You close above, you enter, and magic happens, right? Okay. Breakouts versus pullback key difference. So entry points. Breakouts offer entry points when the price breaks above resistance or below support, signaling the potential start of a new trend. Pullbacks offer entry points after the price retraces to a support level in a uptrend or a resistance level into a downtrend, signaling a temporary pause before a trend. So basically, entry points. Usually, all right. So this is how I trade, right? So if we was to put like the 200 back on there, or we just leave these on here. I wish I did the extended line. Am I? Let me see something. Okay, good. So how I trade is I like to trade the break and I trade the retest. So what I would do is, and it's honestly, let me just clear it out. It's actually better if I show you on the 200. That'd be just way easier to show you on that jet trade. Let me see. Okay, let's see. It's way easier if I show you on the EMA. Way less stuff going on the screen. Okay. So a break, right? A break of support would be the break of the 200 days. So you break, stop loss here, we ran it up, made some money. The retest would be it came back down and it retested. Now, personally, Zay Stock, that's my name. If y'all watched the episode, Zay Stock is looking for a green candle here, right? Now we got a bearish candle. I'm looking for a bullish candle, but this is a break, so you could have took break, took some profit, came back on a retest and added to your position, and then rolled it up even more and made a banger trade here. So that's the break and retest. The break is the break of resistance and then the retest of resistance. That's all it is. I trade both. I trade the breakout and the retest within the same system. So I don't switch systems to trade a break and switch them to trade a retest. I trade both on the same system. So this is pretty similar to how I trade. Very simple. Um, Risk reward. Breakouts can offer greater risk reward potential since you have entered a trade that's potentially beginning. However, they can carry higher risk due to the possibility of a false breakout or breakout that fails to sustain momentum. That is true. Pullbacks generally offer a lower risk entry as you're trading in the direction of the existing trend and entering a more favorable price point, but the reward potential may be smaller when the breakouts depend on it. So basically, a breakout, right? So I'm breaking into a new trend. Now I have a false breakout and a clear retest. Like this would have been this would have messed me up, right? Because I broke out, but then it retested. So that's how I don't trade like this. But it could have stopped me out here. That's why I just put my stop loss in and let it ride. But most people would have got stopped out here if you just trading on both sides of the moving average, which I don't do. I keep my confluence and go with it. You would have took this trade, you would have got false breakout, and then it eventually would have ran. Now the retest is strong because if you would have retest and got like a hammer here, you would have had a good trade, right? No matter what, you had a good trade. But retest offers a little bit of a small. Now this is pretty much even. So this is actually it's not you about one what. So the retest would have just been a better trade. And people use like the retest is usually better, but like the breakout, you never got a chance to retest it. So it broke out and ran all the way up. You didn't get a chance to retest. Here it just broke out. You never got a chance to retest. So sometimes you don't get a chance to retest, which is why I trade the breakout and the retest. If I didn't got stopped out, I just get back in on a retest. You know what I'm saying? So that's kind of how you do it. Now Usually the retest might be like a breakout. Let's say, I'm pretty sure we got support level somewhere here. So let's just say if we had this theoretical support level here. So somewhere in here, whatever. Yeah, bounce here. So it's a valid support level, obviously. Okay. So let's say we getting a breakout, right? So we breaking out, and then we get a retest on this support line, a bullish candle, right? Now, obviously, you have a less reward because you don't have this much upside. Whereas if you got down here, you would have this much upside, right? So you would have got an upside for of here to a 50% upside compared to a 19%. So that's different. That's the difference between $500,000 trade and the $190,000 trade. Which one you want exactly? So that's what I mean when I say there's between a breakout having more versus a pullback having less. Okay. And then volume confirmations, I don't really use volume because volume is not, it's discretionary as well. And like I said, to the best of my ability, I can't stand trading discretionary. The most discretionary I'm gonna get is by choosing between a bullish candlestick and a candlestick I wouldn't like. Like this candlestick, I would never enter a trade on. Oh, not, I'm not gonna say that trade, but I'm not gonna enter like a candlestick. I'm not gonna enter into a trade on. Let's see. Let's give a good example. Let's give a brilliant example. Okay. Say for instance, if we had the support level here, right? Okay, let's say we had the support level here. Let's drop it a little bit. Okay, like here. I still here. Okay, perfect. If this was our support level, just to make it easy, and we were doing a break and a retest, I would have took the break. I would have got stopped out. Then you had this trade, right? Then we would have had another break, but this break is a hammer, is an inverted. I don't like this because we have support here, so I don't want to trade this candle and we have support here because this showed me that this could actually potentially reverse. So this is as discretionary as I'm gonna get. It's choosing the perfect candle to get in. Now this is more of a doji candle slash shooter. So I probably would have liked taking this better, and not also I would have checked for my confluences. So really quickly, we'll close that out. We'll look at the weekly. Are we red on the week? Are we super red? I like that. We have a resistance level coming up, so we might not drop too much more. And on a monthly, we're red too, but like we started to retest, so we might not go much lower. But I could possibly see us if we go back to the daily. I could possibly see us if we was to draw a box around here. It might be a short trade because this is a super duper resistance right here. They probably don't have oh my god, room for much. So what I would do is I'll probably do, obviously, we do a stop loss here. One, oh my God, let's see. I'll be hitting that thing. All right, so this would be target one, and this would be target two. So yeah, we just put target one in the middle of the consolidation area, and target two will be hit all the way down there, right? And then we just see how the trade play out. Because remember, red month, and red week. This is a doji slash. This is not the highest probability, but is it still a trade I would like to risk, make a bet on, a decision on. So take that trade, everything lined up, and then it drops. And the next day, it literally drops to this candle. Does it go all the way down? It does. So and then see, it bounces up. This is not. It's not magic. It's not magic now. It's not magic. It bounces twice. So it came down, it bounced up, then it came down, it bounced up again. These are not just some magical levels. These are calculated mathematical levels, right? We not making this up. It's not hard. You just gotta put the time in. Once you put the time in, you can make it work, dog. Once you put the time in, you can make it work. All right. How to trade breakouts in swing trading. So we kind of already told you how to take breakouts, identify breakout opportunities. Depends on what you're trading. Are you trading support and resistance via lines, or are you trading support and resistance via boxes? Are you trading support and resistance via moving averages? So it just whatever your opportunity is with that. And then how to trade pullbacks in swing trading. Identify pullback opportunities. Some people use Fibonacci zones. I don't like that. Too discretionary for me. 50-day moving averages, that's more mathematical for me. I like that. I like a longer time frame, but previous support and resistance, I don't like that. It's discretionary. Confirm the pullback with signs of price action that suggests bullish candlestick patterns. Like I said, it's the most discretionary we get is doing these candlestick patterns. Like I said, I only like the hammer and then the shooting star. So that's pretty much it with that. But that's pretty much how to do swing trading, breakouts and pullbacks. Just to give you a recap, we do both. As long as the setup is beautiful and brilliant, And as if we get in the trade and that week is green, but the month is red, we're not trading. So just make sure y'all take high probability setups at all times. Yeah, you might miss a trade or two or whatever, but you have an edge by having a higher probability setup. So stop trying to look for that one trade that you would have won and get rid of your edge. We're not doing that, okay? I repeat, high probability setups at all times, okay? Trade with the trend. That is the game I'll give you. I really just gave you pretty much almost as much game as possible. I pretty much gave you the game to become a profitable trader. So in this course alone, we got one more day. We got one more day, and you should be ready to start swing trading. Get your own. So I gave y'all a couple of ways. Even that MACD way is not too bad, no. So don't sleep on like I said, the MACD is not my favorite, but you can definitely make money with it. It's not prominent for no reason. So that's that. See y'all in day 15.